European stock markets are trading modestly lower this morning, with the UK's FTSE 100 index down about 0.4%, while the Euro Stoxx 50 index is lower by 0.6%. In the currency markets, the euro is trading below 130, it's around about 129, while in the peripheral bond markets, Spanish and Italian bond yields are relatively higher, although Spain's is now calming a little bit after a successful bond auction. Good morning, I'm Ishaq, Siddiqi, and welcome to another daily market bite. I'm going to give you a quick idea of what's going on in stock markets today. Now, of course, we all know that Cyprus is an ongoing concern. Since the start of the week, we had a proposed tax on depositors. However, that's been rejected by the Cypriot Parliament, but they still have to come up with 5.8 billion euros to form 10 billion euros of their bailout money. Now they're looking at different ways. There's a number of options available, such as issuing a bond, which seems to be gaining a bit of ground, and also the idea of getting foreign investment from countries such as Russia. But there's been no concrete developments yet, and Cyprus is now in a position where their banks are closed, so it doesn't mean an immediate collapse of the banking system. However, they've got till Monday to come up with the money, and once the money is secured by Cyprus, it would be they would have the bailout by the EU, IMF, and the ECB, the Troika. Now, the ECB earlier said that they would threaten to cut off an emergency lending facility for Cyprus if they cannot come up with the funds. So there's a bit more pressure on Cyprus now to actually start figuring out how to make that 5.8 billion euros up to form their bailout package. Now, aside from that, which is obviously an ongoing concern, mainly because it fears about systemic risk, we've had data out from Europe. Now we've had Eurozone PMI services, which were much lower than expected, coming out about 46.5, showing that the Eurozone economy is in a deep recession, and there's no way out just yet, so it's going to be struggling for a while. That's going to put more pressure on the ECB to possibly look at cutting rates further. At the same time, we've had UK retail sales, which are actually a lot better than expected, coming up at 2.1%. That was much better than forecast of 0.6%. So the UK consumers have actually departed with their hard-earned cash in the month of February, and that's quite surprising given that we had pretty poor January retail sales data. Now, going on for the rest of the session, we have a couple of US data points, such as the weekly jobless claims and existing home sales number. That should be very much in focus. So far today, apart from the macro data, we've had Spanish auction, which was relatively successful, and again restoring confidence in the country. That's all for your daily market bite. Tune in for another one tomorrow.